Best pick Nikkei market close for June 15. Let's get straight into the data from what was, quite frankly, a truly historic day of trading over on the Tokyo Stock Exchange. For today's explainer, our agenda looks like this. We'll start with the historic market surge, then look at the macro catalysts driving this risk-on environment, sector and margin dynamics, key corporate movers, technical breakouts and breakdowns, and wrap it all up with our outlook and short-term strategy. All right, let's jump right into Section 1. The historic market surge, shattering the 69,000 ceiling. So the Nikkei 225 advanced by a staggering 3,297.46 yen. Guys, that's a massive 5% jump in just a single session. It closed at a brand new all-time high of $69,317.50. And this wasn't on light volume either. It happened on a record prime market trading volume of 11.46 trillion yen. It literally marks the very first time the index has closed above that massive 69,000 yen threshold. Now, if we track the intraday action, we saw a 700 yen gap up right at the open. And from there, buying just aggressively accelerated into a 4-digit gain, completely pushing past 3,600 yen advance by midday. This was heavily driven by a massive short squeeze, before the index finally consolidated just a bit to close right near the absolute highs. Moving on to Section 2. Macro catalysts driving risk on. The twin engines. What's really fascinating here is the convergence of two massive macro events today. First up, we had the morning announcement of a definitive U.S.-Iran ceasefire agreement, which, as you'd expect, immediately erased a significant chunk of the geopolitical risk premium. This triggered a sharp drop in crude oil futures, totally cooling those broader inflation anxieties. Now you pair that with the ongoing structural rally we're seeing in the global AI and semiconductor hardware build-out, and well, it essentially created the absolute perfect storm for risk-on equity positioning. Okay, Section 3, Sector and Margin Dynamics, the rotation. Looking under the hood at sector performance, air transportation absolutely surged by 6.68%. Why? Because that ceasefire news basically signaled an imminent return to normalized international flight routes, and crucially, a significant drop in fuel overhead costs. Construction also caught a bid, jumping 6.15% on domestic infrastructure optimism. On the flip side, though, investors rapidly unwound their defensive geopolitical hedges. As you can see, marine transportation and mining slipped by 1.09% and 1.21% respectively, totally lagging the broader market as those crude oil proxies were heavily sold off. Let's turn to Section 4, Key Corporate Movers, Bifurcation in Action. Now, beneath those flashy headline index gains, we actually witnessed a really stark market bifurcation. The highly liquid AI megacaps, they enjoyed substantial institutional margin inflows and massive upward re-ratings. But on the complete opposite side, those pre-revenue, speculative growth stocks faced severe unwinding pressures. It was actually so heavy that it dragged the Growth 250 index down by over 1.0%. Let's look at some specific names. Kioxia finished at 90,910 yen, jumping a massive 12.0%, purely on resilient enterprise AI storage demand. SoftBank Group was right there too, driving the index higher and closing at 7,139 yen. That's up 10.3%, as its global tech and AI portfolio was heavily re-rated. Conversely, looking at the growth sector, space tech firm Astroscale absolutely plummeted 21.0% to its daily lower limit of 1,505 yen. This was entirely due to a widened net loss forecast of up to 10.6 billion yen for fiscal 2027. Meanwhile, the travel agency HIS dropped 10.4% to 913 yen after earlier geopolitical friction forced premium Middle East tour cancellations, which led to a pretty sharp earnings downgrade. That brings us to Section 5, Technical Breakouts and Breakdowns, Charting the Surge. We saw some truly significant technical expansions today. Mitsui High-Tech blasted right through its upper +3 standard deviation Bollinger Band, actually locking limit up after delivering a massive full-year profit upgrade to 14.5 billion yen. JSB also locked limit up with a +3 sigma breakout, rapidly converging on that 9,000 yen tender offer bid from Warburg Pincus. And finally, SoftBank Group printed a definitive upside breakout from its Ichimoku cloud, which really signals some strong, continued upward momentum. Finally, Section 6, Outlook and Short-Term Strategy, Navigating New Highs. Real quick, before we outline those key technical levels to watch, please take a second to subscribe and like this explainer. It really helps us out and lets us keep delivering this kind of objective data analysis straight to you. Okay, moving forward, institutional focus is going to hinge on three major factors. Step one, we absolutely have to monitor the permanence of the ceasefire because any breakdown there could bring that geopolitical risk premium rushing right back into the market. Step two is tracking the USD/JPY currency stability right around that 160.13 mark, which remains highly supportive for Japanese exporters. And step three, we need to watch exactly how the market approaches that looming massive 70,000 yen psychological resistance ceiling. Current data points to a pretty clear institutional playbook right now. They are utilizing technical pullbacks to the 68,000 to 68,500 yen region to systematically accumulate high conviction names. We're seeing capital aggressively migrate toward AI, semiconductor pipelines, and quality infrastructure companies that have immediate cash generation. So, with the geopolitical risk premium effectively erased and capital efficiency metrics steadily improving across the entire Japanese corporate landscape, you really have to ask yourself, will that 70,000 yen mark cap this historic run and act as a hard ceiling? Or are we simply entering the very next phase of a massive liquidity-fueled AI supercycle? Thank you for watching.